Investors often find themselves at a crossroads, pondering the age-old debate of real estate versus stock market investments. In a recent Gallup poll, the Pulse of American Sentiment revealed that 34% of respondents champion real estate as the ultimate long-term investment, while only 18% pledge allegiance to stocks and mutual funds as their investment strategy of choice. However, let's delve into the crux of the matter. The truth, my fellow investors, lies in the delicate balance between these two financial behemoths. Stocks, for instance, tantalize with their siren call of liquidity and the promise of rapid profit amplification within a shorter time frame. On the flip side, the real estate domain beckons with the allure of steadfast returns and the tantalizing prospect of tax advantages. To navigate this investment labyrinth effectively, one must meticulously weigh the merits and pitfalls of both approaches. Your ultimate choice should be an informed one, grounded in your unique goals and risk appetite. Join us on this exploration as we unveil the intricacies of real estate and stocks, helping you chart a course toward financial prosperity. Investing in real estate. When it comes to making money in the realm of real estate, there are a couple of roads you can travel. One path involves acquiring residential or commercial properties to rent them out or flip them for a profit. However, it's worth noting that this route typically demands a substantial initial investment, making it somewhat exclusive. But here's where it gets intriguing. Enter the world of real estate investment trusts, commonly known as REITs. These financial instruments offer an enticing alternative to the traditional real estate game, as they don't necessitate you to become a property magnate or a landlord. Instead, REITs grant you access to a piece of the action, allowing you to reap the rewards from a diversified portfolio of income-generating properties. Think of REITs as akin to a mutual fund but with real estate at its core. What sets them apart is their liquidity. You can easily buy and sell REITs on the stock exchanges, offering you flexibility that traditional real estate investments can't match. Plus, with the diversification that comes with REITs, you're poised to potentially maximize your returns while sidestepping the hands-on management headaches. So, whether you're a seasoned investor or just dipping your toes into the financial waters, REITs present a compelling avenue to explore. Investing in stocks. Now, let's pivot our attention to the stock market, where becoming a shareholder in a company unlocks a world of financial opportunities. When you invest in a stock, you're essentially becoming a stakeholder in that company's future. Your pathway to profit. It unfolds in two compelling ways. First, you can seize the moment when the company's stock value ascends, selling your shares at a higher price than you paid, a classic move in the world of stock investing. Alternatively, if patience is your virtue, you can hold on to those shares, basking in the delight of regular dividend payouts. The beauty of stock investing lies in its versatility. You have options aplenty. Go all in with individual stock picks, where your fortunes rise and fall in harmony with a single company's performance. Or, if you prefer a more diversified approach, explore the world of mutual funds and exchange-traded funds. These financial vehicles empower you to spread your investments across multiple stocks, offering a safety net of sorts against the unpredictable whims of any single company's stock performance. It's a chessboard of choices, each with its unique strategy to conquer the realm of stocks. Comparing real estate and stocks. Let's now dive deeper into the intricate tapestry of real estate and stocks, exploring their nuances that can either amplify your wealth or introduce complexity to your investment journey. These two avenues, though potentially lucrative, dance to their unique rhythms in terms of returns, risk, liquidity, and accessibility. Returns. Historically, stocks have trumped real estate when it comes to returns. On average, stocks have boasted a more impressive track record, yielding between 8% to 12% annually, as noted by Peter Earle, an economist at the American Institute for Economic Research. In contrast, real estate investments have typically delivered more modest returns, hovering around 2% to 4% per year. However, it's crucial to acknowledge that myriad factors, such as economic conditions and emotional investment choices, can sway these numbers, potentially leading to subpar outcomes. Yet, real estate investors, especially those with rental properties, savor the sweet taste of stability through steady income streams generated by their tenants. Sean M. Jones, president of Jones Fiduciary Wealth Management, rightly points out, finding cash flow in real estate is far easier than in the unpredictable stock or bond market. Furthermore, real estate properties tend to appreciate over time, serving as a reliable store of wealth. With the added allure of homeowner tax benefits like mortgage interest deductions, property tax advantages, and property depreciation deductions, real estate can paint a promising picture of long-term returns. In practice, it's essential to grasp that many real estate investors employ leverage, using borrowed funds to acquire properties. This can dramatically amplify their return on equity, injecting a layer of nuance into the stocks versus real estate discourse. For instance, envision an investor who purchases a $100,000 property with a 20% down payment. If that property appreciates by 3% in a single year, they bask in paper gains of 15% on their initial investment of $20,000. Costs? Both realms come with costs that can whittle away at your returns. Fees, commissions, account maintenance charges, and other expenses can nibble into your gains in either asset class. Nevertheless, entering the world of stocks generally requires a smaller initial investment. Some opt for drips or fractional share purchases, allowing for minimal upfront expenditure, as explained by Earl. On the flip side, wading into the real estate realm as an investor demands a more substantial financial commitment. You're not only responsible for the property's down payment but also must grapple with closing fees, mortgages, and ongoing maintenance expenses. It's a weightier financial feat, to say the least. Diversification. Seeking diversification. Both stocks and real estate offer avenues to broaden your portfolio. Real estate investments shine in this regard due to their low correlation with other asset classes such as stocks and bonds. However, if an investor decides to put all their eggs in a single equity basket or concentrate on a handful of stocks, they expose themselves to the vagaries of one company or industry. The lack of diversification can hinder growth and leave them vulnerable to the fortunes or misfortunes of that chosen entity. Therefore, the savvy investor often treads the path of a diversified portfolio, one that encompasses equities, real estate, and other asset classes. This approach can optimize returns while minimizing risk, a financial balancing act worth mastering. Accessibility. Accessibility is the gateway to investment, and here, the stock market beckons with open arms. Investors of varying experience levels can step into the world of stocks with relative ease. Publicly traded companies diligently file financial statements, report earnings, and make information widely accessible. Cable networks and an array of online resources serve as your financial compass, guiding you through market fluctuations. Conversely, real estate investing boasts a steeper learning curve and a higher barrier to entry. It's a realm laden with intricate details, tax considerations, and property improvements that can be mandatory. Accessible information isn't as centralized, and the journey often demands a deeper understanding of market nuances. Plus, if your goal is to enhance income, property improvements introduce an entirely new set of trade-offs. Liquidity. Liquidity is the heartbeat of investment. Stocks offer a pulsating rhythm of liquidity where you can buy and sell within moments. It's a world where your assets can transform into cash almost instantaneously. In contrast, real estate embraces a slower tempo. Selling a property entails finding a buyer and navigating through legal and administrative procedures, a process that can span weeks or even months. This inherent illiquidity can pose a challenge for investors seeking immediate liquidity to capitalize on opportunities or respond to financial exigencies. Sean M. Jones wisely argues that this illiquidity carries a hidden gem, the promise of robust, long-term returns. He notes, there is absolutely a premium to be earned on investments that lack complete liquidity. Logically, this makes sense because nobody would give up liquidity for a return that is the same or worse than liquid investments. In essence, it's a trade-off between immediate access to cash and the potential for substantial gains in the long run. So, as we navigate the intricate labyrinth of real estate and stocks, remember that each path has its unique song and dance. The choice you make should harmonize with your financial goals and risk tolerance as you embark on a journey toward wealth and financial prosperity. Other factors to consider. As we navigate the intricate world of investments, it's crucial to recognize that while historical trends offer valuable insights, the landscape can shift in the blink of an eye due to economic and political forces. To truly gauge the effectiveness of an investment strategy, you must cast your net wider, considering a tapestry of factors beyond mere historical footprints. Market conditions. The ebb and flow of the economy exerts a mighty influence on the returns of both real estate and stocks. Stocks, often the roller coaster of choice, tend to exhibit wilder price swings compared to the steadier real estate market. Here's where it gets intriguing. In the initial throes of an inflationary surge, stocks tend to shine, their value ascending with fervor. However, as inflation mounts to lofty heights, real estate often emerges as the unsung hero, performing admirably amidst the economic turbulence. Peter Earl, the economist extraordinaire, aptly sums it up: stock prices are more volatile than real estate prices, and while stocks tend to perform well in the early stages of an inflationary updraft, under high inflation, real estate may perform better. But beware, for the tides of change in the market are relentless. Real estate and stocks face their unique challenges. In the world of stocks, the S&P 500, our barometer of public equities, dances atop a tightrope. Valuation levels defy historical norms even in the face of dwindling earnings and the Federal Reserve's battle against inflation. Rob Young, the seasoned investment analyst at Telemus, points out that dwindling consumer spending ripples through earnings, gross domestic product growth, and the job market, casting shadows on the horizon. On the other hand, real estate often wears the cloak of an inflation hedge. As prices spiral upward, so do rents, adding a pleasant chime to the cash registers of real estate investors. Yet, tread with caution, for if the economic winds turn too stormy, a recession can sweep away the demand for real estate, causing property values and rental rates to plummet. Financial goals and time horizon. Your financial aspirations should be the compass guiding your investment strategy. If you aim to harvest substantial returns within a shorter time frame, the stock market might be your stage. In contrast, those seeking a steady stream of income with the patience to await returns often find real estate a welcoming embrace. Risk tolerance. The world of investing dances on the tightrope of risk. Stocks, the daring acrobats, thrive on volatility, promising exhilarating highs and stomach-churning lows. Meanwhile, the real estate arena, though less prone to wild fluctuations, has its share of pitfalls. Acquiring a rental property, for instance, demands a substantial upfront investment and may harbor unforeseen costs lurking in the shadows. So, my fellow investors, as you tread this delicate tightrope between real estate and stocks, heed the symphony of factors beyond historical trends. The market, like life, is a grand performance, ever-changing and influenced by myriad actors. To craft a successful investment strategy, you must choreograph your steps in harmony with economic and personal rhythms, aligning your choices with your goals and risk appetite. As we draw the curtains on this engaging exploration of the age-old debate, we hope you've gained valuable insights into the world of real estate and the stock market. The choice between these two financial giants ultimately hinges on your unique goals, risk tolerance, and the ever-evolving landscape of the market. If you're eager to dive deeper and unravel the intricate tapestry of real estate versus the S&P 500, the truth awaits just a click away. Simply direct your attention to the video displayed on your screen. Thank you for joining us on this enlightening journey.